Recent data indicates that the US housing market has started to recover modestly, more than 5 years after the housing bubble burst. In May, Americans bought new homes at the fastest pace in more than 2 years, and the S&P Case-Shiller Home Price Index showed house prices rose in nearly all major US cities in April. All signs the US housing market is improving slowly and hopefully gaining momentum. Well, joining me now to discuss the US housing market is US economist Yelena Shulyatyeva from BNP Paribas. Yelena, thank you very much for joining me. So right now we've got an increase in new home sales, pending home sales bounced back in May, and higher house prices in most of the major cities. What do you put down to being the main reasons behind these recent gains? Of course, record low mortgage rates is one of them, although tight credit conditions is also not helping, is it?
Yes, measures of demand have gained some traction over the turn of the year and more recently responding to historically high housing affordability and perhaps falling rental vacancies as well. So existing home sales reached the highest mark since May 2010, which was the timing of the second phase of housing tax credit. We have seen some pickup in multifamily housing construction, and we also, as you mentioned, we saw new home sales picked up somewhat. And certainly this is the main driver perhaps is the historically low mortgage rates. The Fed programs are helping, certainly are beginning to work. But we believe we just need more. We need to see more of that. And housing demand should continue to recover moderately throughout the year. But the recovery could be long and bumpy.
So you're saying with the broader economy having weakened, especially in terms of growth and the sluggish job sector, as well as a decrease in consumer confidence, although the housing market is flashing signs of recovery, we should take this with a pinch of salt perhaps, at least until we start seeing a serious trend emerging here. Is that right?
That is correct. So yes, as I mentioned, overall we expect housing demand to continue its modest upward trend throughout the year, but it could be limited by a number of factors such as record high unemployment, a shock to personal income following the Great Recession, low prices affecting appraisal values and resulting in a record number of mortgage cancellations. So yes, we did see an increase in pending home sales, but it does not necessarily mean that it will translate into the actual mortgage closing, because 1/3 of all mortgage applications and contract signings right now end up in a mortgage cancellation, in a contract cancellation, because the banks are not willing to lend this money to them, and thus it could result in a mortgage or contract cancellation.
I suppose it's also important not to forget, though, that even with these gains, it's still a lot less than what is considered to be healthy and well below historical levels.
That is certainly true, and a good example is obviously the new home sales data, because yes, we did see an increase, and it was a healthy increase and a welcome development, but if you look at the level of new home sales, it is still historically depressed. This time around, housing contributed negatively to the first year of recovery and made a zero contribution to GDP in the second year of recovery. And now we're barely talking about like a modest 0.2 probably percentage point contribution from residential investment. So yes, by historical standards, we're still not there.
What about the housing market in certain regions, especially those hit particularly hard when the real estate bubble burst?
Certainly there are so many regional divergences right now, and a lot, again, depends on the labor market. A lot depends on the flexibility of the labor force. Recently we have seen that young adults choose to rent instead of own a house, and that's why we have seen this increase in multifamily construction, because builders are choosing to build big multifamily apartments so that people can rent them. That could potentially help to level the regional divergences to some extent.
Overall, how much are you expecting US home prices to fall by this year, or are you more optimistic and forecasting prices to rise in 2012 for the first time in years?
We have seen some positive developments on that front in the beginning of the year, and various measures of housing prices such as CoreLogic Price Index and Case-Shiller, they all showed some pickup in the first 4 months of the year. And in fact, we are expecting this to contribute positively to household wealth in the first quarter and the second quarter of this year. But we have to be a little bit cautious about that. And as I mentioned earlier, the increase in pending home sales in particular is a little bit suspicious given the flat trajectory of mortgage applications. But overall for the year, I think housing has flattened out, and this is a positive development indeed.
Thank you very much, Yelena, for joining me to discuss the US housing market. It was great to have you on the show. Now, coming up later on DukascopyTV, I'll be taking a closer look at the Canadian economy with Scotiabank and Natalie MacDonald with the UK nationwide house price report. But for the moment, goodbye.